Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Credit Suisse. And this is a bank primarily based out of Switzerland, and what you see here on the screen is their ADR shares, which this is how a foreign-based company can trade on US markets. So these are just representative of depository shares and do not actually represent true ownership of the company. You'll see this primarily with Chinese stocks if you think of NEO, XPEV, BABA, or Baidu. The reason that I highlight this is because it's important to note that whenever you are trading stocks of a foreign-owned company, that you recognize that you don't have the same ownership rights of if you were owning the actual shares. From a fundamental perspective, if you look at the company here on the screen, they have a very attractive PE ratio. They have a nice strong dividend, and this is a company that, again, in the banking sector has traditionally done well over the past few months. You can see that in March of this year, they were up as high as nearly 12 to 15%. However, last week and really 2 weeks ago, when we started seeing the Archegos Capital group unwind, Credit Suisse was primarily one of the groups who was doing a lot of the holding for that particular family fund. Now, one of the things I want to highlight that happened, or how this is going to impact Credit Suisse, is that essentially they were managing funds for a family group. Because of the small amount of families involved in this fund, Archegos Capital, they were not required to disclose in the same form and fashion that a traditional hedge fund or mutual fund would have to, with the same type of 10Ks, 8Ks, and perspectives. So think of this as, again, kind of a singular family fund. What they were doing is they had essentially close to 10 to 15 billion dollars that fund currently had in cash. And they did a 500x leverage to where their total volume was nearly $110 billion in total available capital that they had access to. Think of this as the margin trading that you can do on Robinhood or TD Ameritrade, levered up nearly 500% instead of normally you can get as high as 100%. This is the second scandal that has hit this particular fund this year, with the first being a large banking group known as Greensill over in Europe that had a lot of fraud associated with them. So how does this impact the company? Well, if we look at how much money Credit Suisse earned last year in 2020, you can see that their total after-tax income was $2.6 billion. Again, this is the money that they had after taxes. However, having already done nearly a $1 billion write-down, they expect this to lose them a total of $5 billion, which effectively wipes out the past 2 years of total net income. Now, keep in mind that they do have a lot of expenses that they're going to be running this through. We'll see if it all hits the same year revenue, but at the end of the day, they have cut their dividend, they've suspended their share buyback program, and this has effectively wiped out all of the gains that I anticipate that they would have expected from this calendar year on the hopes of a recovering economy. So overall, while the share price of $10.94 may be attractive, this is still very worrisome, the fact that they have seen this much of a hit, and the fact that this is something that they may have additional exposure to. Now, that being said, they have gone ahead and fired their chief risk officer who should have been overseeing this. The issue that I have with the whole situation is this was one family that had access to essentially the equivalent of $100 billion. And this is just a single family. The real question I'm asking is how many other funds out there have this type of leverage that they're using, and are they looking to see if these stocks are going to be going up or down? The stock in question that really kind of threw them for a loop was Viacom, which owns, for those of you who are unfamiliar, they own Nickelodeon, is probably one of their more well-known shows, as well as CBS. You can see that they're currently trading at $41, right at $42. However, this is coming off of a high of north of $100 as late as 2 weeks ago, although you can see that this rise definitely came very rapidly. This is one of the key funds or key stocks that was held within that fund and had to be liquidated relatively quickly. So all of that being said, the important thing to note here is proper risk management. That being said, it would be very difficult for a retail investor to have a total exposure of 500%. However, it's not impossible, and it's important to recognize that you should make sure that you make smart decisions. This being said, I do think that there are much better banking stocks that you can touch right now, although there is still some potential long term with Credit Suisse. But this is 2 scandals within the past 6 months, and that can cause a investor to shy away, and it's not one that I personally am going to be looking at. Admittedly, I'm just some guy on YouTube and not a financial advisor. So if you found this content helpful, please leave a like and subscribe, or if you'd like to talk about it, go ahead and check out the link in the description for our Discord. Thanks for watching, and I will talk to you later.